Alright, so the single biggest pain point for crypto investors right now is bleeding altcoins. Most altcoin portfolios are a sea of red, down 20%, 40%, some over 90% from all-time highs. Many of us are tired, frustrated, and wondering when altcoins will make a comeback, or if altcoins will ever make a comeback. Are altcoin bags a lost cause, forever gone? Or are we just letting emotions creep in during one of the most chaotic parts of the market cycle? Either way, what should we do? That's the question on most of our minds right now, and that's what we are going to answer together in this video with a simple, straightforward 3-step recovery plan. Hello, I'm Crypto Casey, and in this video we are going to discuss why altcoins are bleeding, how we can readjust our crypto portfolios to make gains, and realign our mindsets to successfully survive and ultimately thrive throughout the rest of this crypto market cycle. Let's hit it. Please check out our sponsors, Tangent Wallet, GoBabyTrade, and Uphold. Completely own, control, and protect your digital assets with Tangent Wallet. It's a must-have wallet for everyone invested in crypto, beginners and experts alike. It's extremely affordable, super easy to use, only takes like 90 seconds to set up, and we can literally do everything in the crypto world with it. Buy, sell, swap, stake, use DeFi, all with a simple tap of a card to our phone. GoBabyTrade, the AI-enhanced robotic crypto trader, is generating a lot of us easy passive profits. It's a volatility vampire, sucking all the gains the crazy crypto market has to offer, because so long as prices go up and down, it prints money. And what's great is the chop never stops. It's a set it and forget it investment product. See it in action in this video and join our free weekly webinars every Wednesday to learn all about it. And secure your wealth with Uphold, the trusted money and crypto management platform that actually holds our crypto and cash 100% reserved. It's connected to over 30 underlying exchanges, so we get the best prices for crypto on the market with a lot more liquidity for trading. And when we trade $100, we get $20 free. So scroll down and use links below to redeem all the special offers they have for us. Alright fam, why are altcoin portfolios absolutely wrecked? A few reasons. One being that this cycle is different from the previous 2021 and 2017 bull runs due to supply dilution. Supply dilution is just a fancy way of saying there are a lot more altcoins circulating now than ever before. Tens of thousands more altcoins, and more are being constantly created every minute. And even though there is a lot more money flowing into the crypto casino from Wall Street, we need to understand that smart money isn't gambling on altcoins. All the institutional grade capital is flowing almost exclusively into Bitcoin and to a lesser extent Ethereum. This concentrates a lot of money at the very top. So if we have the same amount of degenerate crypto gamblers relatively as the last few cycles in the casino, rolling the dice on altcoins, while the amount of altcoins to gamble on has increased 1000x, then there simply isn't enough money flowing around to pump prices of most altcoins. So here's the cold, hard, brutal truth of the matter. Basically, not all of our altcoins are going to recover from this. Many tokens that are down 90% will never see their all-time highs again. Yes, ouch, big ouch. We need to remember what we are all doing here though. We are speculating on speculative assets over which 99% of them do absolutely nothing, provide zero value. And now that demand for altcoins and the amount of money chasing altcoins has been the same over the past few years, while the supply of available altcoins has exploded exponentially, the HODL strategy isn't going to work this time around. So we need a plan and we need to execute it. This is where we, if we haven't yet, stop being emotional and start being strategic, so we can increase our chances of being the minority that actually makes it through this crazy, chaotic, and vastly different crypto market cycle ahead. Alright, so here is our 3-step recovery plan. Step 1, review. We need to assess our portfolios and separate our altcoin bags into 3 distinct categories: the strongholds, the speculatives, and the scraps. First up, strongholds. These are the blue chip altcoins with strong fundamentals, active development, and real growing ecosystems. Think Ethereum or Solana. These are altcoins with a legitimate chance of surviving a crypto winter and thriving in the next bull run. Second, we have the speculatives. These are our meme coins, our high risk, high reward plays. Think Pepe Bonk or newer AI coins or compelling gaming infrastructure. These are basically lottery tickets, and we need to acknowledge them for what they are and keep these positions smaller. And third, the scraps. These are the leftover remains from the last hype cycles. Shadows that once had light and are now just dark outlines of former alt season glory. Either failed projects like Terra Luna and SafeMoon, or projects with no activity or development like old forks or projects with dead communities, fading hype, or a brutal token unlock schedule that dumps on our heads every single month. These are the projects we need to be brutally honest with ourselves about. So how do we assess our altcoins to decide whether they are a stronghold, speculative, or scraps? Easy, with this altcoin health score framework that helps us rate our altcoins across 6 categories. Category 1. Market activity. We need to identify if the project still has meaningful liquidity and interest. To do this, we can check volume trends on TradingView or CoinGecko, where we can toggle volume and look at all the daily or weekly charts to see whether or not volume has steadily increased, steadily decreased, or is relatively stable. We can also use the Moneyline indicator tool to see if it's in a bullish or bearish trend on the weekly and for how long. If it's been in a bearish trend for over 6 months, that's a red flag. If you've been following the channel for a while now, the Moneyline has been the main tool we've been using to track where we are in the market cycle, follow trends, and ultimately decide what altcoins to buy, when to buy them, and when to sell them to make gains. To get the Moneyline at a nice discount, we can scroll down and use link below. Cool. So basically, a stronghold will have consistent volume growth, steady liquidity, and active price discovery. A speculative will have volatile or declining volume with moderate liquidity, and a scrap will have flat volume, thin order books, and any delistings from exchanges is a huge red flag. All right, next, category 2. Developer activity. We need to confirm if the developers have abandoned ship. To do this, we can go to GitHub, search the project name, and look at the last commit date, the number of active contributors, and the frequency of updates to the main repository. And we can also use tools like CryptoMiso and Santiment to view developer active rankings. Basically, if development is quiet on GitHub and their social media profiles are still hyping, it's often smoke and mirrors marketing, masking decay. If it's a stronghold, there are frequent commits, multiple active contributors, and regular updates. If it's a speculative, there are occasional commits and a small team. If it's a scrap, no commits in months, and abandoned repositories. Nice, moving along. Category 3, on-chain activity. We need to see if anyone is actually using the blockchain or token. To do this, we can use DeFi Llama to see the TVL, or total value locked, which is just the amount of real money being used or staked in the project. And we can use Nansen or Artemis to view wallet index or decentralized exchange activity. We can also use Etherscan and SolScan to look at the daily transfer count. So if it's a stronghold, we will see rising active wallets, growing TVL, and consistent transactions. Speculative, we will see moderate decline in usage with a small yet stable base. And a scrap, near zero on-chain activity. Great. Next, category 4. Community activity. We need to gauge the energy and engagement of the project's community. To do this, we can use Social Blade or Lunar Crush to quantify engagement trends, or we can also check their Discord server. And on their actual official social media profiles, we can check for any developer and community activity. If it's a stronghold, there is an active community, organic growth, and developer interaction. If it's a speculative, there is mixed or lower engagement and occasional developer updates. It's scrap if the socials are silent, lots of bot spam activity, and the community has vanished. All right, next, category 5, tokenomics and treasury health. We need to determine if the project can basically fund itself. To do this, we can check for upcoming token unlocks or an inflationary supply. We could look at on-chain treasury wallets if it's public to check the balance. And we can use Token Terminal or Masari for a summary of whether or not the projects are still generating fees or revenue. A stronghold will have sustainable emission, a transparent treasury, and ongoing funding. A speculative will have high inflation or declining reserves. A scrap, empty treasury, extreme unlocks, and or inflation. If there's no revenue, no burn, no buyback, and no runway, the project is structurally dead. Moving along. Category 6. Narrative and ecosystem fit. Basically, we need to see if this project even matters. Like, is it part of any current existing narrative, like AI, artificial intelligence, DePIN, decentralized physical infrastructure, RWA, real-world assets, layer 2s, gaming, etc. We need to check if newer projects are already outperforming its use case, or if newer chains have made the project obsolete and the founders aren't pivoting. Stronghold, integral to a current narrative like AI, DePIN, etc. Speculative, out of focus narrative-wise, but still a relevant ecosystem. Scrap, obsolete narrative or lost positioning as an ecosystem. Amazing. So that was step 1, review. Let's go through steps 2 and 3 of our 3-step altcoin portfolio recovery plan. First, another step we all need to take as crypto investors is by adopting the next generation of finance that will replace corrupt and inefficient traditional banking by signing up for a free account with Uphold. It's an amazing on-chain wealth management platform we can use to buy and sell crypto that is better than traditional centralized exchanges because it's connected to over 30 underlying exchanges, allowing us to buy crypto at the best possible prices on the market. It gives us a lot more liquidity when trading, and when we trade our first $100, we get $20 free. Unlike other exchanges, it actually keeps our crypto backed 1-to-1. It doesn't lend it out or anything. And Uphold also keeps our cash 100% backed 1-to-1, where we can get 4.5% APY and a $2.5 million FDIC insured US dollar savings account. We can sign up for free in less than 60 seconds, so be sure to scroll down and use the link below to sign up. Brilliant! Step 2, reallocate. This will be hard for some of us, however, it's the most critical. We need to cut our losses on the scraps. It's painful to sell at a loss, and we need to reframe how we think about it. Instead of thinking we lost money, we need to understand that we are redeploying our capital from a failing asset into one with a compelling future. We are taking soldiers from a battle they already lost and moving them to a battle they can actually win. So we need to take our capital from scraps and consolidate them into our strongholds or even Bitcoin. This will clean up our portfolios and help us focus on our bets on the projects with the highest probability of long-term success, which leads us to the final step. Step 3, realign. We need to shift our entire mindset. The get rich quick on a 100x altcoin mania of 2021 is probably not going to play out like it has in the past. There are just way too many altcoins that exist and continue to flood the market. And smart money, the institutional money, is playing a different game, which means we need to adopt and deploy a more mature strategy. This involves building a strong core position in Bitcoin, the asset with the institutional, even nation-state backing, and a clear macro narrative. We need to make some high conviction bets on a handful of our absolute best speculative altcoins. This strategy will give us more exposure to the safety and upside of Bitcoin while still giving us a shot at the potential higher returns from a few carefully selected altcoins. We need to focus on surviving and thriving with long-term wealth, not just short-term gambling. So is there hope for altcoin season? Yes, it's more likely delayed, not dead. We may see it start to simmer closer to May 2026 when we get a new Fed chair. However, this altcoin season is not going to play out like the last one. The days of throwing darts at random altcoins and watching a 50x are likely gone. We need to focus on data, logic, and following the trends. This will be a much more selective, narrative-driven alt season, not a rising all tides lifts all boats situation. Capital will flow into specific sectors with real hype, like AI or artificial intelligence. And if we are not harnessing the power of artificial intelligence in the crypto markets, we are leaving a lot of free money on the table. AI is taking over, and it's especially taking over in the crypto and financial realm. And now it's easier than ever to make money from trends in crypto by letting artificial intelligence follow and act on the trends for us with Go Baby Trade. It's a robotic trader with over 25 years of market data, enhanced with AI that is connected to level 1 and level 2 trading data, meaning it uses trading data that we don't have access to on the dashboard of our exchange accounts. The way it works is simple. It automatically trades crypto for us and generates consistent passive income by taking advantage of the up and down price action of the crypto markets. As long as crypto prices go up and down, it takes advantage of that volatility by taking profits for us. And what's great is the chop never stops. It's a set it and forget it investment product, literally compounding on the chaos. Doesn't matter if prices rise or dive, we thrive. I've been using Go Baby Trade now since January of 2024, and it's been an incredible addition to my overall investment strategy, especially during the slow buildup of the bull cycle where it's difficult to make money. So if you would like to learn how we can use AI to make passive profits in crypto from the up and down price action with Go Baby Trade, check out this video. If you would like to learn how the next generation of banking with Uphold is a way better and safer option for storing our money and managing crypto than banks and exchanges, check out this video. And to sign up for a free Uphold account, click on the link on the screen. Like and subscribe for more. Be safe out there.